Hi, I'm Brien Lundin, and I'm at the Metals Investor Forum in Vancouver. Joining me today is Amir Adnani, who is the chairman of GoldMining Inc. GoldMining Inc. is an optionality play on gold. It's the kind of a play in this metals market that I've recommended for years and that we've recommended in Gold Newsletter for years. And the thesis is buying massive amounts of gold resources in the ground at the bottom of the market, and then as gold prices rise, all of a sudden those ounces are valued much more highly. It's a way to significantly leverage a rise in metals prices. Amir, that kind of sums it up, but can you go into a little bit more detail about how you have employed this strategy and the size of the resource that you've been able to develop?
Probably one thing that really stands out when I think about specifics of that is June of 2015, when the gold price hit 1,050 per ounce.
Mm-hmm.
And I think it was Goldman Sachs or someone was calling for it to hit even 900.
Yeah.
In that environment, we acquired the Whistler project in Alaska from Kisco Metals. That project had, at the time, and we were able to then come out and put out a resource report of 43-101 resource report on that. I think we paid $2 million for that project in stock, but at $1,050 gold price.
Right. Bottom of the market.
And I remember to this day, because we're in Vancouver, we're in downtown Vancouver, I remember thinking to myself, you can't even buy an apartment for that kind of money in Vancouver. That was at the peak of the Vancouver real estate bubble.
Right.
And here you are buying a very large land package in Alaska that used to be a company, Kisco Metals, that in 2010 had 150 million market cap.
Right.
Okay, so that's the essence of what we've managed to do since 2012, 2013, when the gold market entered the bear market territory.
Mm-hmm.
And your ability to acquire previously explored projects for less than their discovery cost became more available.
Yeah.
And so when you consider that we now control 10.5 million ounces of gold in measured and indicated 43-101 resources, and roughly 12.4 million ounces inferred, you add that up and you look at our total acquisition cost, which is about $81 million since our first acquisition in 2012. We've paid, in essence, less than $4 for a gold resource in the ground.
$4 per ounce.
$4 per ounce.
Right.
And discovery costs, which is someone staking a property, getting permits, packing your bag, going on prospecting, drilling, all of that. You add all that, and discovery costs is between $150 to $200 a month. So in abnormal markets where things become so bearish and sentiment is so bad, the valuation on properties falls so low that you can roll that up. So to your point, we've rolled up a portfolio that is multi-jurisdictional.
Yeah.
We're in 5 different countries: Canada, US, Colombia, Brazil, and Peru.
Mm-hmm.
It's a very large portfolio. Again, talking about the total 10.5 and 12.4 million of M&I and inferred. And those are the characteristics that I believe, and I'm curious to get your thoughts. If you're going to be a leverage play to the higher gold price, you need to be big and you need to be diversified.
Yeah, you do. And looking at the bigger picture, I tell people this is such a cyclical market. It's boom and bust in the resources. And you can either be a victim to that process, which most investors are. They ride the emotions, they don't buy, they don't have the courage to move at the bottom of the market, and then they get excited and then they subsequently buy at the top. In actuality, if they do the reverse of that, divorce themselves from these emotional swings, and if they are able to buy at the lows and sell at the top, they actually use those cycles to their benefit and can leverage their gains by doing that. And buying an optionality play is precisely the way to do that. For GoldMining Inc., you've already done the hard work. You've amassed some 20 million ounces of gold at the bottom of the market. And there are other aspects to the play too, because if you look at it, you're still trading at a fraction of where you were when things were kind of exciting back in 2016 or so. So you have that identified upside in GoldMining Inc. itself. But if we get back to where we were in, say, 2011, and the market caps of the companies that held all of those assets that you've bought, that total is what?
I think it's close to $1 billion, or 900 million or something along
Right.
those lines. But you're right. It's interesting to look at it because our total acquisition cost is about 80 million. Today we're trading at about 160 million market
Right.
cap. So you can see the market's already recognized the inherent value in us having assembled all these properties, and we've moved up. But to your point, in 2016, our company's valuation was more than double what it is today.
Right.
So something tells you that 2016 gold investors were far more bullish than actually today, which is odd because we have a higher gold price.
Yeah, and it's not a far, in terms of sentiment, it's not a far way to go.
But if you go back to 2010, 2011 timeframe, the combined market cap of all the companies and assets we've gathered would be close to $900 million.
Right.
And so it would be significantly higher than where our current 160 million in market cap is. All of that to say that, and you were one of the very early backers and mentors to me in this business model, actually, which is when you look at and study how this kind of business strategy has done in other commodities in previous cycles, with silver and Silver Standard in the 90s and the evolution of that company, and with Lumina Copper and what Ross Speedy did, assembling copper resources in the ground in the Americas in a sub $1 copper price environment, and the inherent re-rating that you get when you see a surge in the commodity price on those resources in the ground. And so that play is a play that we don't claim that we invented this business model. No, but it's finding a commodity, finding a prolonged bear market, finding backers that understand the strategy. Rick Rule is a mutual friend of ours, and the Sprout organization are almost like the prerequisite kind of investor to have for the strategy, or they're kind of the Casey's or the Marin Katusas of the world, people that have that contrarian bent and the patience to back it, because this is not a 1 to 2 year exercise. You look at gold mining, we formed in 2010, went public in 2011, and now here we are almost a decade later and are talking about maybe seeing some benefit or reward for a decade's worth of work. It really is something that takes patience.
So the timing is opportune now, because we're looking at gold beginning a new bull market, in my opinion, a new rally. And so investors who buy now don't have to wait that decade. They know that they can come in now. And what we're looking at from a standpoint of potential is a multiple. You talk about silver and Rick Rule and Jim Blanchard, my mentor in the industry, and Rick Rule rejuvenated Silver Standard in the early 1990s. And that went up some 20 times over. That's the kind of potential we're looking for in a play that's an optionality on the gold price. When we see the gold price exceeding what it did in 2011, well, even if it gets to that level, we get to that kind of euphoria, we have a multiple in valuation most likely for GoldMining Inc. We're looking forward to do much better than that. So it's the kind of a play that I think all investors need to look at to play the rally, the big new bull market we see in gold, and the timing, in my view, is perfect. Amir, thank you so much for joining us.
Thank you, Brien.
It.
I appreciate it as well. Thank you.
Thanks.